This episode of Profiles in Risk is sponsored by Zywave. Insurers, brokers, and agencies are facing escalating risk and rising complexity. Only Zywave delivers a performance multiplier, equipping you with the tools to get risk right, unlock efficiency, and scale at new speeds. Find out more at 𝗧𝗵𝗶𝘀.com.
Hello and welcome to Profiles in Risk. This is your host, Tony Cañas, realizing that he forgot to load his Fire wallet, so I can't do that trick right now. Today I have with me Nakita Devlin, founder and CEO at RIC. So first of all, Nakita, thank you for joining me today. How's it going?
Great. Thank you for having me. Very excited.
My absolute pleasure. And I think I just interrupted you saying very excited to be here.
Yes.
Fantastic. And normally I break the ice over the weather, and you are in New York, and we connected recently, which makes me think that we probably met last week at the what's it called? The Insurance Capital Summit
Sorry, you're frozen. It's breaking up for me.
No worries. So I was saying I'm guessing that did we meet last week at the Insurance Capital Summit in New York?
We did not. I've been a follower for a very long time, so I'm very aware of insurance nerds and you. But we actually connected at InsurTech New York, and then again at Climate Tech Connect in DC.
So InsurTech New York Spring.
Yes.
In 𝗀𝗃𝗃𝗀 PIR. If for the listeners, if you are in New York or the Northeast and you are into InsurTech, you should be at InsurTech New York Spring. Well, if you live in New York, then go to the rest of the meetings, but the spring one is the big one. What a great conference, very cost effective, beautiful venue. Yeah, I love the InsurTech New York guys. I think that was my second time doing that conference and absolutely love it. And then Climate Tech Connect was an interesting first time for me. I thought that it went really well.
Yes.
Really enjoyed it. So I was in New York just last Friday for the Insurance Capital Summit. It was really good. I would highly recommend it. It's invite only, but it's free. And basically the way it works is you just have to apply. And if you are either a VC, a carrier buyer, or an InsurTech founder, chances are you'll get a ticket. And holy crap, I have never seen that concentration of founders and VCs in the same place. It was amazing, absolutely amazing. So great jobs to those guys. Highly recommended for next year. So New York was just gorgeous when I was there last Friday. Like the 74 degrees after the summit, and just a gorgeous spring day. So I'm assuming that has continued, and you're still is it hot and awful, or is it cold and awful?
It's actually a good temperature. We're being actually hit with a lot of humidity and rainfall right now. So on my walk this morning, I had soggy feet, but I will take the rain because we're going to have some gorgeous flowers in a few weeks. I have no complaints here from me.
Fantastic. All right. So some of my favorite episodes are early stage insurtechs who are not yet in market, and I love to connect with you guys while you're still kind of building. So for any other early stage insurtechs, like, reach out. If you're ready to come on the podcast, let me know. If you just want to have an offline conversation, I might be able to help. Let me know. Awesome. So Nakita, we always give the guests the chance to give the elevator pitch. What is RIC?
Yes. So we are a parametric managing general agent, and we have built a platform where we're going to host micro parametric products. Our first product to market is a micro parametric rainfall product, looking to address flooding concerns across the US. And the product is priced at $14 a month with a $10K payout. And I'm assuming most of your listeners are probably familiar with parametric, but if there's any folks out there who are hearing that word for the first time, parametric insurance differs from traditional indemnity insurance in that there's a predefined policy activation trigger ahead of time. And once that criteria is met, the policy activates and the determined amount of money, the sum is sent directly to the individual. And it's become a really, really popular idea in theory as we start looking at the intersection of what insurance can do to address climate concerns across the US, because parametric insurance can help get sums of money really quickly to people who are recovering from catastrophes. So like I said, our product is $14 a month with a fixed payout of 10,000. And what we do on our end is we'll calculate a unique rainfall activation trigger for each one of our customers that correlates to a large scale event that's likely to happen in their community where they're going to need that money rapidly. So it's complementary to the existing insurance value chain. We really recommend that folks should still carry a full flood insurance policy and, have ours in place to help get that quick cash after a large scale event where they're going to need money rapidly. They likely have a deductible in place on their existing policy. But the good thing with parametric insurance is that the use of the funds is really flexible. So we know that post catastrophe, that there's a lot of financial expenses that crop up that are not going to be covered by your traditional flood insurance policy. So things like if you need to put your kids in childcare or pay for a babysitter or stay at a hotel or relocate, or if you have to order takeout because your refrigerator got fried in this flooding event, there's a lot of financial losses that happen that is not accounted for with that traditional, property indemnity policy. And that's where RIC comes in. We're really looking to fill that financial gap quickly for someone experiencing for our first product in an extreme rainfall weather event.
All right, that was a lot, and I took notes furiously.
Okay.
And we'll try to kind of start digging in. All right, so parametric. Yes, my listeners are probably aware of parametric. But I do always take the time to give a little bit of a summary, because when I got my CPCU back in 2011, I swear that parametric was never mentioned. And I remember having the first guest on the podcast around episode 80 or 90, who talked about parametric, and that particular one was crop insurance for like Africa out of London, and I remember being blown away by the operation, and since then it's become much more popular. The first usage I saw here in the US was Berkshire Hathaway launched, I don't know if it's still around, but a travel delay policy that would have made my life a lot better last Friday, when I did something stupid after a perfect set of 18 days on the road, Vegas, Atlanta, Chicago, Atlanta, New York, and it was amazing. And then on the way back from New York, I made two horrible mistakes. Number one, I cheated on Delta. And flew Frontier, which I've done a couple of times this year. Delta and I are now in couples counseling, but the biggest part is I flew Frontier from Newark. The moment I got out of my airport, out of my Uber to the airport, I received a notification that my flight was 6 hours delayed, and there was nothing to be done. Like the last Delta flight had left. And like it would have been $100 to go to one of the other two airports, and I wouldn't have made the Delta flight on time. So I got stuck. I ended up getting home at 4 a.m. and canceling a bunch of meetings. I successfully successfully jet lagged myself on a trip in my own time zone. Only Newark can achieve that. Never again. I swear, never again. I'm setting foot in Newark. All right. So the first parametric one I saw here in the States was a parametric flight delay product, and I thought that made a lot of sense. And since then, I have been blown away by the amount of parametric creativity and innovation we have seen in the U.S. market in the last couple of years. All right, so parametric, the key defining factor is there is an oracle, and if it says you had a loss, you just get paid. There's no claims process, right? And it's a predefined payout, right? So now in your case, okay, so this first product, flood product for rain in the US, 14 per month, amazing. That is incredibly affordable for a $10,000 payout, incredible. The underwriter in me is concerned about that flat fee, right? The underwriter in me really wants to kind of like do some level of underwriting and charge you more if you live in Florida than if you live in Phoenix, right? So I'd love to drill into that. So why is it a flat $14 a month?
Okay, so that seems like a really simple question up front. Why is it a flat $14 per month? And I'm going to give you a really simple answer, but then I'm going to dig into the thought process behind it. So the $14 a month price was my co-founder and I, we were, we have over 15 years of experience each. So combined 30 years of experience in the catastrophe portion of the insurance industry. And I have sold flood policies before, and it's a really complicated, horrible, horrible experience, especially in the US. It's largely people buying flood insurance in the US are buying it from the NFIP, whether they know that or not. And when we were looking at addressing the problem, we looked at, well, how do we make this an easier process for folks? And one of the things we looked at was it's really complicated for people to understand the pricing for flood, and the pricing is often very, very expensive. So when we were looking at it, we looked, well, what if someone could only afford a nominal amount every month to address their flooding risk? What would that amount be? And we came up with $14 a month. So that's actually where we started with our product development. We looked at, well, if you can only afford $14 a month for an insurance to address this need, what does that get you? And then we worked backwards from there. Well, okay, if $14 a month is what you have to pay, how much insurance does that buy you? And what we've done is work backwards from that. So what the unique rainfall trigger that we calibrate for each individual customer, it's unique to them and to their geography. So that's where some of the beauty and the art of underwriting comes in. So I don't want to give away exactly what that threshold is set to, but it's set to a larger scale event that's likely to happen within their community within an expected time frame. And what we've done, because we know that it started as like a really good theory and thought. We knew that we had to go validate that. Is that $14 a month, 10K payout, is that actually going to work in the real world? And is that a valid large scale event that's likely to happen in their community? And we have seen, so we've gone out and we've been able to work with the city of Norfolk in Virginia. And we went to them with this theory of this product that we put together. And we asked them to look at their historical losses and historical events that have happened in their community. And when we correlated the events that they said were majorly impactful at the household level, because the city itself has a lot of good data and information on like what these large scale events are and the ones that they'll need help with. And absolutely, we hit the nail on the head. We tied it back to a few of the larger scale hurricanes that hit that area, and our product would have activated. And then since then, we've done historical testing across the US to make sure that our product actually functions the way that we want it to. So yes, it's a fixed price. So it's $14 a month with that fixed payout, but that adjustment that we make for the rainfall threshold at each location is unique to the event type that we think is going to happen in their community. So it's really a ratio-based product where we can adjust the levers. If we're working with a community that says, hey, we have more frequent flooding, then we can look at pulling down the payout or increasing the price to reach that event type that they're looking to address. But for the most part, that the event type that we've set our standard product to, we've tested across the US, and it works the way that we expect it to.
Okay, that makes sense. Fantastic explanation. Okay, so basically the underwriting, it's I don't even know if it would be underwriting, but these I'm trying to find the right terminology. I don't know if insurance has the right terminology. Maybe
Right.
I need a new designation on parametric, specifically. Okay,
And I
how
would, sorry,
go
go.
how basically, if I'm understanding correctly, how we make sure that this is profitable in the private market is by uh by the rain threshold. So yes, and I'm making up numbers here, but a 3 inches of rain overnight in the Everglades of Florida is not an event at all. 3 inches of rain overnight in Houston or Phoenix could cause significant flooding. Right, it depends on the specific area's ability and how often they get that level of rain.
Yes, absolutely. And we have seen that the places that are going to experience larger rainfall quantities, their rainfall threshold is going to be higher, but they've already put in place mitigation and adaptation. Like they know that this is a problem, so they've developed a lot of infrastructure to address that need. So, if you want to look at Florida versus Nevada for us, both states are going to have very different rainfall thresholds, but 3 inches of rain in the desert is destructive. And we've seen that, a few years ago when Burning Man got flooded after what would seem like an incredibly minor rainfall event in like Houston or New York, right? We can handle 3 inches of rain in 24 hours. So our product, we tested it for that event too, and it would have activated because that is catastrophic to the desert. And yes, so there's a beauty and an art in how we're setting those rainfall thresholds. And if I give you a little bit of comfort, I want to say that my co-founder was an underwriter for a very long time. So, and really how Rick sort of came together is that I have all this experience from the broking side, having sold catastrophe policies, and my co-founder has a lot of experience from the underwriting side, helping build models and putting together product structures. And we just happened to be sitting next to each other at our old job and just kind of like shooting the crap, talking about parametric insurance and bouncing ideas off of each other. And I was just like, well, we really tried to, turn underwriting on its head and look at, there was a point in time where we were realizing that specifically in the catastrophe space, a lot of the underwriting that's happening is you look at all of the characteristics of a home or the mitigation and adaptation that someone's done to protect their home. And oftentimes it's really lacking because people didn't know 30 years ago that they needed to start saving a ton of cash to do this work to their house.
Absolutely.
So not only did we look at the price ahead of time when we were setting the price, like, well, what can someone afford? We also looked at, well, what happens if someone didn't know 30 years ago to have a pool of cash laying around to make their home more secure? What data sets can we look at that are not going to take any of that information into account? So our parametric product looks at just meteorological data, and we think that helps with transparency for our end customer, but also, it's a real world product. My background in insurance is that I've worked with really sophisticated, large-scale purchasers of insurance, right? Like they have risk managers and teams of people that can help them address these needs that they have and address climate concerns. But we knew that the average consumer in the US is not going to have that expertise on hand and be able to pay for that. So we really took that into account when we started building our product. And we said, well, we have the expertise. We know how to build this micro product and keep it and frame it in a way that it's actually going to be useful for the average consumer. And that's how like Rick was born a little bit, in terms of like, we see this entire space of the market that's not being addressed. So when you look at flood insurance in the US, the largest flood insurance writer is the NFIP, and the second largest is the private market. But by leaps and bounds in the US, only 5% of Americans have flood insurance. So there's this huge market space if you want to address the needs of the average American, so that like rent homeowner. And that's where, when we started putting our product together, we knew who that customer was going to be from day one, because right now there's very little competition in that space. And we knew that if we could craft a product that would be meaningful for them, that we would have a good chance of being early in the space and pulling more folks into the private market insurance value chain.
Fantastic. Is it only meant for commercial lines, or is it meant for personal lines also?
So to start, we actually have a really interesting distribution methodology. And so again, $14 a month, our product is very, very cheap. I was a broker. You would not have gotten me to be even remotely interested in selling a $168 policy annually.
Of course.
But we did that by design. We knew that, okay, we wanted to make it uninteresting to like the traditional P&C broker. But we knew we had to sell at scale. So one of the things that we were looking at is who's really good at selling micro policies at scale, and who also has a need in this climate, this extreme weather future that we're facing in the US. And through a lot of, trial and error, we really got to understand deeply how the employee benefits space works. And so our product is actually being brought to market as one of the first, climate products in the employee benefits space. And we're actually working with some large brokers to have our product offered as a core benefit offering. So while you're selecting your medical insurance, you'll be given the ability to select some flood insurance that's going to address your financial needs post-catastrophe. And that ties in really well to the employee benefits space, because employers are looking to strengthen the financial backbone of their employees. And employers themselves know, as they've gone through, these extreme weather events, that there's an ROI there for them if they can help their employees get back to work faster. So looking at that distribution point, the group distribution value chain is really well built out. It's really well tested. They're incredibly great at selling, smaller scale policies at smaller priced policies in large quantities. So that's how we are, bringing our product to market. We knew early on, when we were speaking to some insurtech VCs, we got a lot of pushback from them saying, hey, can you make this a commercial product? Because when you look at the flood insurance space or the catastrophe space, they primarily serve commercial customers. They don't address, they have no inroad to renters and homeowners. And there's no infrastructure to support that. And we looked at it as, well, the commercial space is actually really well served by brokers, right? Like, I could go craft a unique bespoke parametric product for a large scale insurance purchaser, but there's no inroad into this like huge untapped market that has the need. So that's how we started putting those pieces together. And we hope that we'll be the first of many, new climate associated P&C products that are going to be offered as an employee benefit. We are starting with parametric rainfall, but we're also looking at extreme heat, winds, and wind speed. Wind speed would address like surge for those coastal customers, and then also wildfire. Our goal is to create a suite of products that can address, climate concerns for employers across the US.
This is fantastic. I was looking at the website, noticed that you've got Chris Lowell and Charlie, right?
Yes.
𝗨𝗪𝗀𝗃 on the board, and noticed that you are part of the board for Insure. Yeah, no surprise there. This has insurers and Chris's fingerprints all over it, and it's so cool to start running into alumni from Insure. So cool to start running into actual companies out there coming out of the Insure labs, or we could say like it's not an accelerator, but the Insure brain trust, because this is such important work. So for this first product, what are you missing to get this into the market? Are you needing a fronting carrier? Are you needing reinsurance? What is the next step to get this out into the market?
So next steps for us is we are speaking with capacity providers, and we are speaking with some of the larger brokers, and we're also very interestingly speaking directly with some large employers across the US. So we've actually had a bit of good press. I'm going to give a shout out to 𝗍𝗵𝗶𝘀𝗸, our PR firm. They
Fantastic.
helped. Yeah, I mean, again, I come from the property and casualty space, so I didn't know a lot of folks in the HR employee benefits space, and they helped get some information about us out there. And as a result of that, we've had an influx of employers reach out to us, saying, hey, when is this coming? When is this going to be live? Because it's actually part of their business continuity planning.
Absolutely. At $14 a month, and if we get hit by a flood, or if my employee gets hit by a flood, this takes the stress out of that short term, gets them back to work. This is a win for society in general.
Right. Absolutely. So I would say where we are right now is just we need a little help just getting the message out to more employers that you should talk to your broker about this. Like, we are absolutely going to be broker distributed. Some of the early employers that are reaching out to us are still going to work with their broker, but where we've found the conversation going is that they're interested in not only getting this offered to their employees, but they're interested in covering a portion or all. So having it be employer paid, that is completely new. We've never seen a P&C excess insurance P&C product that an employer is willing to pay for. And that has just been for us such a huge signal from the market that they have been underserved for so long. And I think we need to get more people talking about this very real need that employers have been having that the P&C market has not been able to address for them. And, you need to have the right technology in place to be able to address that. And that's where our technology platform comes in. It's all API microservices. So we can we can integrate pretty seamlessly with, larger employers and the brokers. So what we need right now is just more activation and awareness in the space.
Okay, fantastic. It's such a creative solution, and I love seeing it. For capacity providers, what do you want them to know? I mean, they need to read your prospectus or whatever it's called within within that world. I've never been a reinsurance broker, so I don't know. But what do you want them to know?
Oh gosh, a lot. This conversation has just been, it's interesting because different folks need to know different things. I think that there's a whole subsect of reinsurers that will sort of look at the price and say, oh, that's not a lot of money. That's not a big payout.
The first thing it makes me think of is Lemonade, right? The whole $5 a month renters insurance, and we will lose money for a decade, right?
Yeah.
And even worse, IPO as a tech company, and then the investors find out that we're actually an insurance company, kind of thing.
Right. I know they did it. They did it so dirty.
Correct. They really like muddied the waters for every future insurtech.
Yeah.
And now we're getting a lot of really good insurtechs. Nobody has IPO'd, I don't think. A few have been acquired. But yes, I can totally see how to a capacity provider that got egg on their face with Lemonade, Hippo, or Root. I can totally see, and Lemonade being the real offender when it comes to like pricing at a stupidly low level.
Right.
So yes, $14 a month, that's the first thing they're gonna think of. So how do we get him beyond that?
Right. And I think that they don't like that. I'll tell you that much. I think it turns the insurance industry off, a little earlier than they should be turned off from it, just given that history that we just discussed. But what they do really like is parametric because it's really, really simple to understand.
Mm-hmm.
Once we get people to look at the fact that like this is meteorological data and we have a wealth of meteorological data, they start to understand that our product is actually structured in a way that it's going to perform likely how we're expecting it to perform. So I think that like once we sort of like pass that first hurdle of them maybe seeing some flashy words that they don't love, we've actually found that the conversations have gone really, really well. The other hurdle that we sort of have to get past, and this is for anyone operating in this space, is that they start looking across their portfolio of their other flood risk or their other catastrophe risk. And unfortunately, that's not something that any one of us can really, account for. So that, that's also deeply a part of the conversation is how much cat risk do they already have on board that they need to address? And then it's really just getting them comfortable with the fact that this is not the first time I've helped put together parametric products. And you talked about this earlier. You said that event cancellation was one of the first parametric products you saw on the market. But having been a broker for so long, parametric insurance has been a part of my vocabulary for so much longer than when it became a popular term. And my team at the brokerage that I was working for, we were putting together earthquake parametric products well before it was making the news cycle. And I absolutely think that there's a way to do it. I think that some parametric products that have come to market have struggled in the scaling portion of what they're doing. And I think that that's where Rick really shines, is that we've thought first about distribution and how to get to market, leveraging existing well-oiled distribution frameworks. Like that employee benefit channel is incredibly, incredibly tested and well structured. If you think about it, your dental insurance is, roughly $150, maybe $300 annually, and dental insurance is as well. And we look at it as like climate products. So we used to, pet insurance and credit, identity theft insurance was once new to the employee benefit space. No one really thought of that as a core benefit. And we think it's time to sort of shift that perspective to that we need to start looking at climate P&C products as a necessity core benefit for employees in the US. I don't want to like dive too deeply into it, but there are a lot of changes that this administration is making that are going to mean that a lot of folks are not going to have access to federal funds that it's going to be pushed back a little bit more on the states to address this concern. And there's absolutely going to be a gap between when the states can raise the funds in their coffers to address these extreme weather events. And this is, we've had a lot of success talking with not just Virginia, but across the US with other communities who are also looking at parametric insurance. And where we've seen that conversation stall is who's going to pay for it. And we've already solved for that. We don't need the city to pay for it. We're going to help us work with the large employers in your area, and they'll either offer it as an opt-in, opt-out benefit, and the individual can pay for it, or the employer can pay for it. So we've done like a ton, it's very typical of a female founder. We've done a ton of homework and research before our launch to test this product.
Nakita, you are so polite, so corporate polite. I'm gonna, and you can ask me to cut this part later. This is why we don't do this live, if you don't like it. So I'm gonna play the Obama anger translator role. That I don't do anger, but I do direct. So for the listeners, the feds aren't gonna do anything to help us with climate risk until at least 2028.
Yeah.
Right. And local, states and communities will have limited budgets.
Yep.
So yes, this is the time to figure out how to create solutions through public-private partnerships,
Yep.
and distributing it through the employee benefit side. Brilliant, absolutely brilliant. What other piece? Female founders. Yes,
Okay.
it is shameful and stupid how little money female founders get.
Yeah.
And that's a whole different conversation. But VCs, my God, come on. Companies with enough women in the board, companies with female founders, companies with female CEOs, do better.
Right. We're more likely to reach unicorn
You're
status.
more likely to get your money back.
Yes.
And right, by investing in more female founders. If you look at your portfolio, I'm not a VC, but if you look at your portfolio and you find that 85-90% of them look like your kids or you 25 years ago, 30 years ago,
yeah,
that is not the best portfolio management. You are falling victim to your own unconscious biases. Easiest way to get around that: invest in more female-founded businesses. All right.
Yeah.
So I will get off of my. Thank you for coming for my TED talk. I will get off of my milk carton or whatever the saying is. All right. Okay. So this is the first of several parametric catastrophe products that you're going to be launching as employee benefits. What are the others that you can already talk about? And kind of tentatively, are you thinking 2026? Are you thinking 2027? Kind of what's the roadmap? And of course, we all know that like this is very fluid.
Right.
But what does the roadmap look like?
Where we find ourselves is that extreme heat is rapidly emerging as, and I think we're going to be really early on extreme heat. Extreme heat is a huge problem across the US. And I think what we're going to see happen is that employers, once we have a good ROI on what the rainfall product can do for an employer, I think we can start looking at extreme heat. And the employers are starting to recognize that this is a problem, not just employers, the insurance industry as a large, they're starting to recognize that this is going to be a wide scale national problem and impact insurance in all different sorts of ways. So typically when we think of extreme heat, we think about day laborers outside who are going to be exposed to extreme heat. But that's really not the case. There's a lot of really good science and information coming out around extreme heat and looking at, well, what actually happens if you have this office worker who's going home nightly and not turning on their air conditioner and sleeping in a hot home or hot apartment because they can't afford to turn on their air conditioner overnight. What happens is that they show up to work, their body's already a little run down. They're more likely to create accidents and have, bigger health issues impact them around asthma. So, when we think about extreme heat, we think about, heat stroke. But really, when we think about extreme heat, we should be looking at pre-existing conditions like asthma and the inability for the body to cool themselves during these prolonged heat exposures. And what we're looking at, because it's a parametric product that we're going to be building, is that it's not just the heat temperature, it's really the heat index. It's the idea of heat plus humidity.
Mm-hmm.
And that's when, when you look at like something like flood, it's the most common and costly natural disaster across the US. But when you look at extreme heat, it's actually the most deadly natural disaster across the US. You have more folks dying, you see an uptick in hospital usage. So when we're looking at that product and who we're going to, we see it as like a nice overlap with, especially because we want it to be an employee benefit, a nice overlap to cover potentially, unexpected hospital bills. Because it's parametric, you can use it to cover your financial loss. So the ability to give someone a the payout for this product is probably not going to be 10,000. We're thinking that the payout should be a smaller payout to address like potentially a hospital room visit, potentially replace, with extreme heat events, the grid can go down, help you replace some contents around your house, or help you move out of the way of the extreme heat event by getting to a hotel or a cooling center. So we're really looking at that payout being, between a few $100s to low $1,000, $1,500 payout, depending on what community you live in. And we think that that is also, it's something that employers are talking about. They're nervous about it because they pay the disability insurance, right? Like they have the health data. They know that this is a problem coming down the pipeline. So I would say that like those conversations have also gone really well with employers early on. Because you don't want to like confuse your sales pitch, if you will, and we'll focus on flood. But right off the bat, we were being hammered with, well, what other climate issues can you address? And we took that as just like such a good.
No kidding. No kidding. It's a great sign from the markets.
Yeah, absolutely.
We love you. What else can you do for us? What else can we buy from you? I mean, I'm imagining the Fry from Futurama meme. Take my money. Take my money. Fantastic. All right, so we are running out of time here. This has been a fantastic conversation. Any other insurtech coming out of Insure, reach out. I'd love to have you on the podcast. I don't care if it's super early on. What can I do for you? Fantastic. I say this often, but I mean it triple today. I really look forward to have you on the podcast, back on the podcast a year or two from now, once you're fully deployed, and talk about what you've learned and the giant difference you've made. I love how you're thinking about these problems in an incredibly creative way. I've never been a broker, so my exposure to the benefit side is limited. But I never thought that this kind of thing could be distributed on the broker side. Much less. Yes, I never thought this could be distributed on the broker side because of such low premiums and commissions per policy. And I never thought that it could be distributed as an employee benefits. It just never occurred to me.
Right.
And it is a brilliant use of the channel.
Yeah.
Absolutely brilliant use of the channel.
I hope that if there are any, and this is just a shout out to my own like career trajectory. I started in the broking space and I got really interested in the insurtech space, Tony, absolutely because of the content that you were putting out. But I would love to see more activation in the broker space of folks who really deeply, I think InsurTech 1.0, we really saw a lot of folks coming from outside the insurance space. There are so many smart brokers and underwriters out there. Get together, start talking about these problems.
Yes.
I want to have more co-founders.
Yes. I am not an insurtech guy. I am a traditional insurance guy. I am a middle market underwriter who ended up accidentally running the largest podcast in the US insurtech space. And after writing my book about millennials, found myself unable to work in the carrier space. We love you. We can't have you on payroll. So I ended up becoming a recruiter to support myself and continue to support our industry. For those like me or like you, right? If you are either a carrier person or a broker or agency person, and you have identified a problem that needs a technological solution, you are living in the best possible timeline. Everything else in our world, we're living in the bad timeline. This particular issue, we are living in the good timeline. There are so many resources that didn't exist 10 years ago, much less 20 or 30 years ago. I had a recent interview with John Lincoln, one of the co-founders at Veruna. And he talked about how, like, when they built Veruna, none of the infrastructure existed, how much easier it is today. So yes, do it, basically. Yeah. Start looking for a CTO, start building an MVP, Nowadays, you can build an MVP without a developer. Like you can build it on a custom chat GPT, right? For $25 a month, without knowing how to program. The accelerators, Insure. There's the Insurance Nerd Slack channel, insuranceslack.com, which I don't talk about enough. There are so many resources. Get on my calendar. It's free. I will point you in the right direction. Nakita, thank you so much for your time today. This has been an awesome conversation. When this goes live, I will tag both you and the company on LinkedIn. I cannot wait to see this hit the market. Thank you for going after a real problem, both in our industry and our society, in a creative and intelligent way. Yeah, this is super exciting.
Awesome. Thank you, Tony.
My pleasure.